New year housing data showed renewed momentum as pending home sales and home price appreciation both exceeded expectations, signaling continued demand despite affordability headwinds. At the same time, initial jobless claims fell below forecasts, reinforcing the narrative of a still resilient labor market. Good afternoon and welcome to 2026. I hope you had a great close to your year and are ready for an exciting year ahead. The new year has already started with plenty of momentum and a bit of controversy as markets reacted to the U.S. capture and extradition of Venezuelan President Nicolas Maduro on January 2nd. The news initially rattled the markets, particularly oil, following comments from President Trump about potential U.S. investment in Venezuelan energy production. However, optimism returned by the end of the day with stocks finishing higher. Here at home, we're heading into an important week as the first jobs report of the year takes center stage, which will be a key data point that will help set the tone for mortgage rates in the weeks and the months to come. Let's dive into what took place last week and how it affects you. Here are your headlines. In housing news, pending home sales rose 3.3% from October to November, beating expectations and reaching their strongest level in nearly 3 years, according to the National Association of Realtors. Contract signings on existing homes were up 2.6% compared to a year earlier. So what is the bottom line? Because pending sales typically lead closings by 1 to 2 months, November's increase points to stronger transaction activity ahead. NAR chief economist Lawrence Yun noted that improving affordability driven by lower mortgage rates, wage growth outpacing home prices, and greater inventory has helped draw more buyers back into the market. Now, in other housing news, the Case-Shiller Home Price Index, one of the most widely followed gauges of U.S. home values, showed 0.2% monthly decline from September to October before seasonal adjustments, but a 0.4% increase after adjusting for seasonality. Nationally, prices are still 1.4% higher than a year ago, a slight increase from September's 1.3% annual gain. The FHFA index, which tracks home finance with conventional mortgages and excludes cash and jumbo purchases, reported seasonally adjusted prices also rose 0.4% month to month. Year over year, prices were up somewhat stronger at 1.7%. So what is the bigger picture? Home price growth is beginning to regain momentum, with the Case-Shiller index showing its first acceleration in annual appreciation since January. If buyer demand continues to strengthen, as suggested by better than expected pending home sales, home price appreciation could trend higher in the months ahead. Now, initial jobless claims fell 16,000 in the latest week, with 199,000 people filing for unemployment benefits for the first time. Continuing claims, which measure those still receiving benefits, also declined, dropping 47,000 to 1,866,000 claims. So what is the bigger picture? The initial jobless claims remain relatively low, likely influenced by seasonal factors. Employers often delay layoffs around the holidays, and travel during Christmas period may have temporarily reduced filings. Meanwhile, continuing claims, which have been elevated for much of the year, could begin to ease as benefit eligibility expires. Since most states offer up to 26 weeks of unemployment benefits, the spike in initial claims last June suggests many recipients may now be nearing the end of that window. As noted at the start of this update, it's a busy week on the economic calendar. Labor market data begins Wednesday with reports on job openings and ADP private payrolls, followed by jobless claims on Thursday. The week wraps up Friday with the comprehensive employment report, including non-farm payrolls and the unemployment rate. Additionally, delayed new home construction data for September and October will also be released on Friday. While all this is market moving, we have started the year on a good note with mortgage rates as the 10-year Treasury opened this week, down 4 basis points at 4.15%. I'll be in touch next week with an update, but for now, have a great rest of your week.